Good afternoon, viewers. My name is Imran. I'm a UK and international tax specialist. Today, I'm here with another interesting video. In this video, I will explain to you how this corporation tax works in the UK, which companies are subject to corporate tax in the UK, and how to work out your accounting period. How can you make relevant adjustment to your accounting profit to arrive at trading profit, and how to work out your total taxable profit. So stay with me. I will explain to you in more detail with illustration. This will make it very easy for you to understand corporation tax in the UK. This topic is highly tested in ACCA, ACA and CTA exams, also useful for AAT students and graduates in the UK studying accountancy and finance, also useful for beginners who are interested in the UK taxation and they wish to know how this corporation tax work in the UK. Now, after watching this video, so you will have better understanding of corporation tax. First thing is that if the company is subject to UK corporate tax, so this will be based on the resident status of the company. So a company is resident in the UK if it is incorporated in the UK. Now, companies which are not incorporated in the UK are also resident if their place of central management and control exists in the UK. So that will be the case if there are individuals, a group of individuals, or one individual set up a limited company overseas, but they exercise the day-to-day control and being present in the UK, and they exercise day-to-day control from the UK, so that overseas company will be subject to UK corporate tax. This company might be subject to overseas tax as well. However, under double tax treaty, there will be relief available for double taxation. I will be making a separate video for this. So, and also a non-resident company profit will be subject to UK tax if this company trade through a permanent establishment in the UK. In example, if they say is a company has a PE in the UK, so any profit attributable to that PE will be subject to UK corporate tax. This PE is a separate topic. I will be making a separate video. So here, just for you to understand the basic, so that will be enough for your exam. The next thing is how to work out accounting period. So a company is chargeable to corporation tax for each accounting period. An accounting period is the period for which the company prepares set of accounts. For example, 31st December 2023. When accounting period begins for corporation tax, an accounting period begins on earliest of when the company starts trading. If a company acquires a source of income, if the company becoming a resident in the UK, and then immediately after the end of previous accounting period. When the accounting period ends for corporation tax is also very important. For example, in exam, if you get that small question or short question, so then you need to know when the accounting period ends. Sometimes the examiner can test you. An accounting period, or it's good to know in the real world as well. For example, if you running a limited company or you set up a limited company and then that goes in liquidation, so you need to know the basic rules. An accounting period ends on the earliest of cessation or commencement of the trading. The company beginning dormant, for example, if the company doesn't do anything, so that is called a dormant company. The end of the company period of accounts, obviously, if a company accounting period ends, so that will also there will be end of for corporation tax as well. 12 months after the accounting period begin. For example, if a company just recently set up, so and then from the start of the trade, you need to take 12 months. So that will be the end of the accounting period for corporation tax. So remember, for company's house purpose, we can draw an account up to 18 months. However, for corporation tax purpose, an accounting period cannot be or cannot exceed 12 months. So therefore, you need to know if the accounting period begin, it must end after 12 months. So I will show it to you with illustration on the following slide. The company entering in liquidation. For example, if a company can't pay their debt and they enter into administration or liquidation, so their accounting period will end. The company beginning or ceasing to be resident in the UK. If a company ceases to be trading in the UK, or they migrate abroad, or the central management or control migrate, or they start resident overseas, and they controlling the company abroad. So obviously, this company will no longer be a resident in the UK. Here is example. Shark Limited incorporated on 15th of May. The company opened a bank account on 18th of May. Shark Limited commenced trade on 25th of May and prepared a set of accounts to 31st of May 2023 and annually thereafter 31st May each year. So what are the Shark Limited accounting periods? So that is a newly incorporated company. So in exam, you might be tested. So here is like the incorporation of Shark Limited does not cause an accounting period to commence. So remember, if you set up a limited company, it doesn't mean that it's starting trading. Opening a bank account does not commence an accounting period. So commencement of trade, for example, when the company starts trade on 21st of May, this will cause an accounting period to begin. So remember we said on the previous slide, an accounting period cannot exceed 12 months. Hence the first accounting period will end on 24th of May 2023. The second accounting period will commence on 25th of May 2023 and will end on 31st May 2023. Because on the company's house, the accounting period will show that it's end on 31st of May. So you have to break it in the first 12 months and the remaining days. So the first 12 months was because from the start of the trade was 25th of May, they start trading 2022. So the first 12 months ends on 24th of May 2023. And then obviously the accounting period on the company's house end on 31st of May. So for corporation tax, this period will be only another 6 days or 7 days. This is a pro forma for corporation tax computation. So you will start with the profit before tax per accounts, then you add back disallowable expenditure. I will make a separate video which will explain to you what are the disallowable expenditure, and then deduct income not taxed as trading income, such as rental income and interest income. That would give you tax adjusted profit before capital allowance, and then deduct capital allowance. After that, you will get trading profit. Also remember, in adding back disallowable expenditure, no adjustment needed for private expenses by a company employee. Director or employee will be taxed on private expenditure as employment income. For example, if a company provides a car to an employee, and that car has a private usage and it's costing company like £10,000 a year, so the company can claim full deduction. However, the employee will be subject to income tax based on the provision of car for private usage. If you have seen my other videos, so there is a separate method to work out income tax benefit on provision of car. However, the company can claim full deduction on that provision of car. No trading interest expenses must be added back. So non-trading interest expense must be added back. Dividend paid are not deductible as trading expense. So we start with profit before tax figure in the accounts to calculate the trading profit. So the dividend received by a company is not taxable. Therefore, they are normally deducted in arriving at trading profit. Also remember, capital allowances for a company are always calculated for accounting period, not for a period of accounts. So remember, period of accounts can be longer than 12 months. It can be up to 18 months. However, an accounting period for corporation tax can never be more than 12 months. Remember, there will be never be a private use asset column. So that will be in case, for example, if they say to you there's a car given to an employee has a private usage. On that car, we can claim capital allowances. So remember, do not make a private usage column in the capital allowance calculation, because that will be waste of time. Remember, the employee will be subject to income tax on the provision of such car. So it does not affect your corporation tax in any form. All interest income is dealt with under non-trading profit unless the company trade is that of lending money, such as banks. Further points to remember: non-trading gain taxes income relating to non-trading intangible fixed assets such as patent need to be adjusted. UK property business income should be also adjusted. Adjustments are also needed for gain on disposal of the property. This will be taxed under capital gain schedule. Here is the example: James Limited with an accounting period ending 30th of September 2023 with a profit before tax of 200,000. This includes 5,000 interest income. This profit is after deduction of depreciation of 10,000, the client entertainment of 5,000, cash donation to a charity of 5,000, motor expenses of 10,000 with 60% private usage. The main pool had a tax written down value of 50,000 at 1st of October 2022. The tax written down value on special rate pool was 35,000, which related to a director car with 60% private usage. There are no acquisition or disposal during the year. Work out your total taxable profit. So this example is quite basic. However, just for a start, you need to know how to work it out, and later on I'm going to be presenting some advanced issue which would be helping you out. Now, continuing with the James Limited, so you will start with the profit before tax, then add back depreciation because depreciation is a capital expense. Then add back client entertainment because client entertainment is not an allowable expense. Then add back donation because donation is deductible as qualifying charitable donation. I will show it to you why we are adding here. However, the relief is available if there's any trading profit because the donation itself cannot generate a trading loss. Therefore, we are adding it back. Later on, we will see if there's any trading profit. Then we will claim deduction for charitable donation. And then less interest income because interest income is subject to corporation tax. However, under a different heading. Therefore, we're making a different column. It will be added to total taxable profit. However, to work out your trading profit, we will remove this interest income. So that would give you adjusted total taxable profit before capital allowance. Sorry, total adjusted total trading profit before capital allowance. And then less capital allowance, you will have a trading profit. Now, this is the basic computation or calculation of capital allowance. So all you need to do, create pools, main pool and special rate pool. Then we don't have other information. There's no addition and there's no disposal. So we do have the tax written down value brought forward of 50,000 on main pool, 35,000 on special rate pool. Then on the main pool, you just apply 18% rate and then 6% on the special rate pool. So remember, no separate column for private usage adjustment of director car. Remember that director car in the question it was mentioned, it has 60% private usage. However, based on the private usage, the director will be subject to income tax and the company can claim full deduction. So no separate column for private usage adjustment of director cars. Now, after working out your trading profit, it's time to calculate your total taxable profit. So the total taxable profit will be, so obviously the sum of trading profit, and then obviously the interest income is also subject to corporation tax, but however under separate heading. So we can see there's income for corporation tax purpose. Therefore, we now can claim relief for qualifying charitable donation. So you can see we have deducted qualified charitable donation. So thanks for watching. If you do have any queries or questions, drop me a line or two, or you can comment in the comment section, and I'm happy to answer your queries. I'll be making more videos on capital gain taxes. I already have several videos on car benefit, provision of loan, and then provision of living accommodation, exempt benefit, and taxable income, non-taxable income. I have also videos on corporation, how to calculate your corporation tax with the real world example. So thanks for watching. You can subscribe to my channel, and now I'm wishing you a very good night.